Hi, and welcome back to Investment Banking University's Investment Banking course. This is, of course, the 6th video, and we're continuing on the consumption process as well as a growth hacking methodology for accelerating the consumption process. And this is associated with the first phase of the perpetuity, or the first side of the perpetuity, which is known as the build side. So continuing on this, the key here is to advocate the startup's methodology and then show traction on the methodology, which will be used to gain followership from influencers and then turn them into evangelists for the methodology. Mechanisms like social proof can be helpful as they accelerate willingness to participate in followership or experiment with usage, but they are not a replacement for one-by-one advocacy of a methodology. Social proof kicks in incrementally as a startup hits an extra 0 at the end of its followership and user numbers. Example 100, 1,000, 10,000, 100,000, and 1 million. So we already talked about the consumption process, but we're going to go over just one very briefly here. First step in the consumption process is becoming aware of a methodology that's being advocated directly on a social network or email or another channel. This methodology adds value for the individual, it's based on reason, and thus the user decides to be a follower. Followership of the brand adds value enough so that when the ask, in order to become a part of the platform or on the platform, the individual is willing to experiment with usage. Usage adds value enough so that the user becomes an active user. Ultimately, the 5th step is willing to recommend it to others, and then 6, ultimately willing to pay for usage after the value is demonstrated on the platform. And we already talked about this, but since there's a definite process to consumption, one should have a growth hacking methodology that's consistent with this fact. The growth hacking methodology means manually connecting with individuals on various social networks and platforms to first advocate the startup's methodology. So now we're going to look at perpetuity phases, multiples, and the market for the perpetuity. And of course, in the build side, the primary responsibility of the CEO is to advance the company or opportunity through the phases or stages of the perpetuity, starting with the syndication to job shop to perpetuity to growing perpetuity, and then diversified. And we see that on the bottom axis here, stage of perpetuity, which moves from syndication all the way to diversified. And what this chart is ultimately showing is that the valuation based upon the EBITDA multiple, which is along the left-hand side here, we see it starting at 0 and moving all the way up to about 12 times EBITDA, increases as we grow through the different phases of the perpetuity. And the key de-risking variables, customer concentration, recurring revenue, and dependence on owner, are our de-risking factors. And we see those associated when they're low with high multiples. And when they're high, they are lower multiples. And so the changes in these 3 key de-risking variables correspond to changes in the EBITDA as well as the different stages or phases of the perpetuity. So we've already talked about the stages of the perpetuity, so we don't have to go back into that. But now the next question within the build side is how to de-risk the benefit stream. And this is associated with the 3 key de-risking variables that we just saw on the chart. So in terms of perpetuity science and the scientist, the key 3 de-risking variables are levels of customer concentration, where high levels of customer concentrations correspond with a lower EBITDA multiple, and low levels of customer concentration correspond with a high EBITDA multiple. Levels of recurring revenue, where high levels of recurring revenue correspond with a high EBITDA multiple, and low levels of recurring revenue correspond with a low EBITDA multiple, as we saw in the chart. Levels of owner dependence, where a high level of owner dependence corresponds with a lower EBITDA multiple, and low levels of owner dependence correspond with a high EBITDA multiple. So the next part that we're going to be talking about is actually perpetuity analysis, and we're including this on the build side, and it's going to be associated with a consultant type role or consulting approach. So on the build side, we're ultimately concerned with the creation and management of perpetuities, and we first explore the perpetuity analysis by perpetuity analysis, perpetuity building process, and timeline, including sources and uses, and then move towards a methodology for perpetuity management. The goal of perpetuity science, of course, is the building, growing, management, exit, and ultimately buying again of perpetuities. So ultimately, while we're learning about perpetuity science itself, we're looking or analyzing for perpetuities to create, how to advance a perpetuity to the next phase that like we saw in the chart, and then perpetuities that should be exited from. When is it appropriate to exit from a perpetuity, and when is it appropriate to buy a perpetuity? So perpetuity analysis is performed with an understanding that a perpetuity's ideal course of action at any given time is related to one of the three sides of the perpetuity: the build side, the sell side, and the buy side, which will depend on the phase that the perpetuity is in. So ultimately, in terms of perpetuity analysis, what we're going to be doing is building an industry and sub-industry indices or an index made up of public comps. We're going to benchmark these comps into the different perpetuity phases and find out where they are in relation to each other. We're going to then build financial statement models for each of them and determine a DCF, comp companies and precedent transactions valuation football field, for each of them. We're going to compare peers in the perpetuity phase to intrinsic value to determine, hey, is this going to be a buy side deal, a sell side deal, or a build side deal? Where are peer multiples at in relation to intrinsic value is what we're asking. If it's a build side deal, what needs to be done to get to the next phase of the perpetuity to increase valuation? If it's a sell side deal, how do we exit the perpetuity? Who are our likely buyers? If it's a buy side deal, how to acquire a target perpetuity? Perpetuity science explains how perpetuities can be built, managed, and exited from to create wealth, and thus it has an owner focus, not simply a capital markets focus. But we're going to talk a little bit about that a little bit later in the course. So we're going to get into some of the great industries that are going to be associated with building perpetuities, and those are going to be primarily focusing on technology, media, education, and business services. And we're going to talk about why that is. So wrapping up perpetuity analysis, as we stated, the goal of perpetuity science is the building, growing, management, exit, and buying of perpetuities. So we're looking at opportunities or how to create value for an existing perpetuity, or when should we exit from it. And this is really depending on where it is in relation to the chart that we looked at before. So perpetuity analysis is performed with an understanding that the perpetuity's ideal course of action at any given time is related to the three sides of the perpetuity. So we're looking at each company or opportunity in relation to, hey, is this a build side deal, a sell side deal, or a buy side deal? And this is what the perpetuity scientist is ultimately trying to determine. So within the build side, we're now going to be asking the question, how to be a CEO. And we've already talked a little bit about this related to the perpetuity phase chart that we saw before. And the CEO's role is to bring a company or opportunity through the different stages of the perpetuity by building recurring benefit streams, i.e. cash flows, and at the same time de-risking those benefit streams. In doing so, the valuation of the perpetuity moves from backward-looking to forward-looking. It's based upon a multiple of future earnings and thus maximizes valuation. The CEO should be familiar with perpetuity science and the perpetuity phases and should thus be a perpetuity scientist. As the perpetuity changes, the formula for valuing the perpetuity changes as well, and this corresponds to the different phases of perpetuity building. As we move through the phases, the role of the owner of the perpetuity becomes more passive and the valuation becomes larger due to the size of the EBITDA increasing, the EBITDA multiple increasing, and the discount rate decreasing. And so the perpetuity becomes less dependent on the owner to exist and run and increases valuation accordingly. So the different phases of the perpetuity are what we already discussed. Number 1, syndication. Number 2, job shop. 3, perpetuity. 4, growing perpetuity. And 5, diversified. And this is what ultimately we see here, just modeled in an infographic, which is just helpful for us to be able to visualize it, as we can see the phases of the perpetuity moving from 1 to 5. In addition to a CEO, If you're outside of the organization and you're looking to add value for a company or an opportunity, i.e. a perpetuity or prospective perpetuity, we're going to be acting in a consulting capacity at some point in time. So the consultant's role is to aid in the building, selling, or buying of a perpetuity. And since the consultant's value is in relation to the perpetuity, the consultant's core methodology or body of knowledge should be perpetuity science. Perpetuity science is a set of methodologies that we discuss building, selling, and buying of perpetuities. So the consultant uses methodologies related to the key questions that serve as the basis for a consulting engagement. And the key questions, of course, are associated with the side of the methodology, the build side, how to move a company or opportunity to the next stage of the perpetuity building process. And the methodology for the phases of the perpetuity is the following, which we've already seen. On the sell side, how to obtain a valuation higher than the NPV of the perpetuity. The methodology for doing so is to get a buyer to price in the next phase of the perpetuity into the current valuation. For example, if the perpetuity is at the perpetuity phase, get the buyer to pay for a growing perpetuity, tell a growth story. In terms of the buy side, the key question there is how to locate and take ownership of a perpetuity that is being valued at less than its NPV, net present value. The methodology for doing so is to get the seller to accept a price for a previous phase of the perpetuity, or to price in more risk associated with and point to the three de-risking variables and sort of questions that we have associated with them that will decrease the valuation. For example, if the perpetuity is at the growing perpetuity phase, get the seller to accept a perpetuity valuation. So ultimately, looking on the build side and just thinking at a higher level, we're going to ask ourselves the question, what should you learn in business school? And given that we've already talked about perpetuity science as the answer there, we're going to talk a little bit about what ultimately that means in a breakdown of the nature of the perpetuity, the phases of the perpetuity, and the different sides of the perpetuity. And since the perpetuity is the basis for both industry and capital markets, it follows that business school should thus focus on educating individuals on these things. And we've already talked a little bit about how the standard MBA curriculum should be changing at most business schools, moving from a functional siloed focus to an integrated perpetuity focus. And then we ultimately end up seeing in this infographic, we're answering the question, how to be a consultant. So this is the answer to it. So in terms of a consulting engagement, what does it look like to have a consulting engagement with a prospective company or opportunity? What we're going to end up doing is we have to start with origination. So we're going to be sending our perpetuity book and perpetuity advisory teaser to target companies. We're then going to perform a perpetuity analysis and assessment of where we are now. And we can do that using the chart with evaluation multiples as well as the three key de-risking variables and show where we're at in relation to what we want to be. And where we want to be is by soliciting the goal of the ownership. Where's the valuation, the implied multiple want to be? Determine a plan to move there from the current phase to the desired phase and ultimately end up executing on that plan. So that's going to be it for this video. We're going to talk about perpetuity management in the next video.